Good evening. Hope you all had a great Friday and end of your week. Today the market managed to end in the green, even though it spent most of the day in the red. The market was propped up by the great performance of the large tech stocks, such as Amazon, Apple, and Facebook, as the average stock was still down 0.2%, as we see the Russell 2000 was in the red by a large amount. The Dow posted a gain of 0.44%. While the S&P managed to end in the green by 0.77%. The Nasdaq had the best day by far, as the index gained 1.49%. Consumer spending rose by 5.6% in the month of June. Regardless, fresh leading indicators are showing that households are beginning to pull back on their spending, which suggests that the U.S. economy may be in for a choppy ride moving forward. A University of Michigan report showed that consumer confidence actually fell in the month of July. Lara Koslow, managing director and senior partner at Boston Consulting Group, said, quote, "The more COVID cases there are, the more fear there is from consumers, and that impacts their spending in a negative way," end quote. Saving is good for households and the economy in the long run, but it saps the economy of activity that could stimulate a quicker rebound in the short run. Therefore, the willingness and ability of consumers to spend is a key ingredient for an economic recovery. Coronavirus relief talks are not going well, as the $600 extra unemployment benefit expires today. The House was supposed to begin their August recess, but Majority Leader Steny Hoyer told members the recess would not start until the chamber passes a coronavirus relief bill. Meadows told reporters the Trump administration officials made, quote, "no less than 4 different offers," end quote, to Democrats to temporarily extend the unemployment insurance. There was a whole host of quotes and comments from the different representatives, but ultimately they are arguing and blaming each other for the lack of agreement. Pelosi said, quote, "We anticipate that we will have a bill, but we're not there yet," end quote. It is very important for the bill to be passed as spending begins to stall or even reverse, as we know how important it is for US GDP in getting the economy back up and running. Tech was the clear winner today, as they had shares rise by more than 2.5%. Consumer services rose a nice 1.2% as well. There was no clear loser, but the trio of healthcare, consumer goods, and oil and gas fell slightly less than 1.2%. The table shows us that it was a scattered day of trading. All sizes of value ended in the red, but large cap core stocks gained the most as they rose by 1.65%. Most sizes of growth managed to be in the green as well. The best performer in the S&P 500 today was Apple. Shares soared 10.47% on the back of blowout earnings from the tech giant. Apple beat big on EPS estimates and demolished on revenue estimates, as they were projected for a fall in revenue of 3%, but actually grew it by more than 10% on a yearly basis. Due to these earnings, Apple received a host of upgrades from investment firms, as they are targeting a price target of around $460 per share. Shares of Kansas City Southern rose by 9.68%. Kansas City Southern is a company that owns railroads. Kansas City Southern is the smallest of the 5 major freight railroads in the United States, and they play a key role in the U.S.-Mexico trade with the network across both countries. Shares spiked due to news stating that Blackstone and Global Infrastructure Partners are teaming up to explore a potential takeover bid for Kansas City Southern. The railroad has an approximate $14 billion market value, and the value of a bid could exceed $21 billion, including debt. The worst performer in the S&P 500 was Under Armour, which had shares fall more than 8%. This was due to their earnings and guidance. We'll get into these numbers later on in the show. The other poor day came from Newell Brands, which owns brands such as Elmer's Glue, Sharpie, and Yankee Candle. Shares fell 7.45% as they reported earnings this morning. Earnings seemed strong as they beat on top and bottom line estimates, but revenue did fall nearly 15% on a yearly basis. Ultimately, investors must have been looking for more. Getting into earnings, we'll start off with Under Armour, ticker symbol UAA, which is a formerly popular athletic clothing brand. This morning's earnings beat estimates, but the company had a terrible slash in revenue and provided grim guidance. They beat non-GAAP EPS estimates by 9 cents, as they recorded a loss of 31 cents per share. Revenue fell a horrific 40.5% on a yearly basis, as they recorded revenue of just $707.64 million for the quarter, which did beat estimates by $169.41 million. The company also did manage to beat on gross margin estimates. On top of this, the company is forecasting revenue to be down 20% and 25% in the back half of the year. Shares ended in the red by 8.12% due to that awful guidance. Next up, we have ExxonMobil, ticker symbol XOM, which is the large oil and gas company. Exxon posted poor earnings this morning, as they missed on both top and bottom line estimates. Non-GAAP EPS missed estimates by 10 cents, as they recorded a loss of 70 cents per share. Revenue fell an awful 52.8%, as they recorded revenue of $32.68 billion, which was lower than estimates by $5.55 billion. Despite these poor earnings and having a loss in back-to-back quarters, shares rose 0.5% on the day. Next up, we have Caterpillar, ticker symbol CAT, which is a producer of construction equipment. Caterpillar posted some good earnings this morning, as they beat on top and bottom line estimates by a good margin. Non-GAAP EPS came in at a gain of $1.03 per share, which was better than estimates by 31 cents. Revenue was down 30.6% on a yearly basis, but they still managed to record quarterly revenue of $10 billion, which topped estimates by $600 million. Shares fell after the company announced that they were concerned about a prolonged decline in sales numbers. Shares ended the day down 2.82%. Next up, we have AbbVie, ticker symbol ABBV, which is a pharmaceutical company. The company also beat on top and bottom line estimates. Non-GAAP EPS topped estimates by 14 cents, as they had a gain of $2.34 per share. Revenue came in at $10.43 billion, which rose by 26.3% on a yearly basis and beat estimates by $290 million. Their 2020 guidance came in below estimates, and shares fell 1.18% today. Lastly, we have Charter Communications, ticker symbol CHTR, which is a large telecommunications and mass media company. Charter beat on bottom line estimates by a wide margin, but top line estimates not so much. Non-GAAP EPS came in at a gain of $3.63 per share, which topped estimates by $1.16. Revenue managed to grow by 3.1% on a yearly basis, as they recorded quarterly revenue of $11.7 billion, which was better than estimates by a marginal $90 million. Investors were very pleased with the news, as shares rose 2.94% for the day. That is all that I have for tonight. I hope you have a tremendous weekend, and I want to wish a happy birthday to my mother. I love you lots. I look forward to seeing you all again on Monday.